We start with a check on the crude prices, which are trading at a two-week highs amid slow activity ahead of the Christmas holiday. Also aiding crude prices are supply fears out of South Sudan, where ongoing refinery strikes have led to lower supplies. On your screens, in the last few minutes, we've seen some decline coming in, so 0.25% to 0.5% down coming in for Brent and the NYMEX there. The gold in the meanwhile is trading around that $1,200 per ounce as investors gauge the impact of Fed's QE tapering. Remember, gold fell 3% last week after the Fed said that the U.S. economy was strong enough to scale back its massive bond buying stimulus. On your screens, there is a decline coming in for the Indian gold and silver prices too. I look back at 2013 then on what has been happening in case of the gold and silver prices and what should be expected from 2014. For that, let's get in Prithviraj Kothari from Riddhi Siddhi Bullion. Mr. Kothari, hi, welcome to the show. A look back first at the year that's gone by, where the gold prices have declined 29% globally, 12% down in the Indian markets as well. What's your sense on the prices and the policies that have had an impact on it?
I think it's a too difficult year. If you see the customs duty hike 3 or 4 times, and a lot of restrictions should be there thereafter, the 80-20. So basically the years are too nervous here, because if you see the rate side, when the Indian markets are not in the international market of buying, automatically the international market should be the drop down. This is the main effect on the international market. If you see when it's a policy announced on 22nd jewelry, the price is almost 1,500 and something. Now it's almost 1,200. So it's more effect on the each and every jewelers have their lot of the expanding business, and everywhere their showroom, the now lack of consignment, shortfall of a consignment, the artisans are, all the unemployment figures are going high because there is no consignment for an exporter also. So it's a lots of difficulty now happening in last 2-3 months. So still I think now, yesterday if you heard the statement of the Governor Sahab, they said it will take time for the policy should be declared. I think it's a 2-3 months still going same like that.
We all are waiting for that, Mr. Kothari. But even as the government has put a lot of curbs, instances of smuggling have gone up. How do you think the government is looking into it, and what have you seen that impacting the industry in the meanwhile?
Two things is there. If you see the bank rates are, it says suppose it's a bank rate is the 62 rupees. The unofficially dollar rate is the 64.50. Why? Because of the gold coming from the NRA channel. If you 1 kilo NRA brought gold in India, after paying the customs duty and after paying the difference between the overseas and here, they still get 1.5 lakh rupees profit. So each and every NRA from the Gulf side, they bring 1 kilo of gold. Any passenger, they can coming from, they can wear 40 grams of a gold, approximately 1 lakh rupees. So they get almost 10% difference, because in the market, international market compared to the domestic market is almost 20% difference. So if it's happened, then I think it's a grey market should be more and more coming in the market. After the NRA coming 1.5 lakh, if you see how many flights are coming and how many passengers coming from the Gulf side. I'm talking only of the Gulf side. And I think government should reduce custom duty to 10% to the directly 6%. There it should be stop out. If we see the lot of jewelry also coming in India, if we pay custom duty of 16.442%, still we get benefits. And if if imported jewelry comes in the market is a lot of huge quantity, then the domestic market should be wiped out. So each and everything should be very difficult to be there. If a grey market is coming, lot of goods are coming in the market, then it's a difference between the grey market and the bank costing. It's too different. The grey market and the billing, the rate should be the difference always be.
Well, that's about the domestic markets, Mr. Kothari, but the Fed tapering has put further pressure on the prices. How do you see the prices going forward now?
If you say that India is the main buyer of a 950 tons of a gold, is a physical one-way side. If we compare with the China is a lot of buying and selling is there. But India is only the one-side buyer, and basically the 950 tons, instead of that we are only buying 5 or 10 tons in a month instead of 70 or 80 tons or 100 tons. So it's all affecting the international market. If you see the international market price, if India is still not bringing the goods or bought the gold or open the policy, the market price should be crashes to below $1,000, because if you see the physical side, only the Gulf, Middle East and the India and Asia and China is the buyer. And if we see the ETF also, liquidation is there. Constantly the liquidation is still there. So I think gold prices should be dropped down, because no one is the buyer, physical side buyer.
Well, as you said, Mr. Kothari, that perhaps it would take a couple of months, even 3 months before the RBI governor and the government can start rolling back those policies that they brought in 2013. What kind of policy stand do you see being taken in 2014 then?
No, if it's okay, then current account deficit, we are also very worried about the current account deficit. But simultaneously, government have to see everything. The gold depository scheme they have to, government have to say the parallel something, which gold come to the easy way to be available everyone by the jeweler. Now it's very difficult to the jewelers. If you jewelers have a lot of export order, but they can't get the gold. The gold replenishment they can't get. It's a huge problem of a gold replenishment. If we get bought in the local market and export, we lose money, because the local market is almost $100, $125 is a premium. So no one can export the goods. So if you see the data, current account deficit figures are dropped down. The export and import figure both are dropped down, because of the lack of availability in the market for export purpose. No one bank have a consignment for export. No one bank replenishment for the gold. No one no one consignment clear by easy by the customs department. So each and everything hurdle should be there. So the drop down with the both import also drop down as well as the export also drop down.
Fair point. And a final question, Mr. Kothari, then. Do you see Asia buying continuing? As you said, China, India and much of the Asian countries have seen strong physical buying coming in, while the developed world really has been selling into ETFs or even futures. The funds also have redeemed holdings in case of gold. How do you look at balancing both of these?
If you see in the India, the demand is still a huge demand there, but globally you see the ETF or liquidation. If you see the SBDR, the liquidation constantly there. Now is almost the 800 tons is there. If you see in the whole globally, only the China is the main buyer and Middle East, and this is happening because of the India 10% increase, the duty increasing, and lot of buying from the neighbor country like Bangladesh. If you see the import, their imports should be the higher side, like Bangladesh, like Pakistan, Sri Lanka, Dubai, everywhere. If you see that, and also the Singapore, because there is a huge buying there, because they are all supporting with the Indian market, because there is a lack of the shortfall of a consignment. If you see the market are like that, and if the international market, I think should be on the around $1,150 to $1,200 maybe supporting there. I think Indian imports should be in the official channel should be around 200 tons or maybe 250 or 300 tons. But unofficially like Bangladesh, Pakistan, their import figures should be huge. So ultimately the unofficial channel should be, the grey market should be more active.
Thank you so much, Mr. Kothari, for joining us and giving us your sense. So that's the view on gold from the industry there, 1150 to 1200, perhaps seen as an immediate support level. On your screens, of course, it's more than 0.5% of a decline for the global markets. Let's also get in both then Priyank Upadhyay and Vijay Bhamwani. They join us live as well. Vijay, to you first, what's your sense now coming in for the gold prices? Because the near term doesn't make too much sense talking about. It's a thinning market now. The holiday season will be on in a day now. What's your sense? Where are we looking at a support in both of these metals?
Manisha, good evening, Manisha. I think both gold and silver are headed lower. And in terms of prices, I would still stick to 42,500 for silver and sub 28,000 for gold. If at all the fall is to basically deepen further, I think 26,800 to 27,200 is where gold can go, and silver could possibly test the support of 42,000 also. I don't see exuberance coming in on both these bullion counters.
Priyank, what's your sense really coming in for the near term, slightly medium term as well, for day traders or somebody who wants to hold positions here?
Actually, overall, still the picture remains on the downside itself. Talking about the short to medium term perspective, as long as on silver prices stays below 45,000, it's more likely that it could head lower towards 42,000, 42,500 in short term. Likewise for gold, also on the higher side, unless and until it doesn't cross about 29,500, 29,600, there is a slight possibility of going towards 28,000 to 27,500 in short to medium term. Again, if we talk about from the evening perspective, from the intraday traders perspective, since we have seen a sharp decline in prices in the last week, and on Friday we saw a bit recovery on the short covering side, that could but continue in the evening session today, but overall still bias remains on the downside.
Priyank, how would you be looking at the base metal space? Because while we've seen negative returns coming in for 2013, most of the people that we are speaking to channel, whether in the domestic markets or global, are slightly overweight for the year 2014 when we go ahead. Are you of the same view, and which metals would you want to pick up from the sector?
Yeah, looks likely with the data coming in from the US and China are giving us global recovery in the economic. So there could be, in the first quarter at least, we expect base metals to perform well on the positive note. Talking about the specific base metal from the medium term perspective, copper, zinc, this two commodities looks likely to perform going forward. From the short term perspective, if we talk about copper prices, from the intraday perspective, we go long on dips around 456 levels with a stop loss below 453, and we expect targets of around 464, 465. In short to medium term, we expect prices rallying towards 470 to 478 zones.
Vijay, which one would you want to pick up now in the short term that we have in 2013 and going forward as well? Where do you see some strength coming back in charts?
Manisha, 2014 may just be a better year than 2013 has been for industrial metals, provided one can buy low enough. Now, where exactly is that low? I think aluminium could turn out to be a dark horse. Nickel is another metal I would look at. And of course, copper, which is the tin roof of the economy or the barometer of the economy. If you're looking at industrial recovery, you can't ignore copper. Now, as far as levels are concerned, I think I've mentally written off the remaining part of 2013 as a very small window period in which I might try to extract profits from the market. I'm sitting on the fence. I'm not trading till the year is over. But I would look at copper, I would look at nickel, and I would look at aluminium in that short order.
To the energy space, and this is the only space where we have seen gains coming in, Priyank, and the way there have been statements coming in from whether IMF, which is talking about stationary or stable recovery coming into global markets, or whether it's OPEC, which also goes on to say that 2014, if there are more supplies, the demand also is expected to be on higher side. Looking at these, how would you want to approach this sector in the new year?
As we are talking about from the medium term perspective, crude, we feel at least in the first quarter could be on the positive note. We expect WTI going higher towards 103 to 105 in short to medium term. Overall, 95 and 93 zones on the WTI should act as a strong support, and unless and until prices doesn't close below 93 levels, we expect a recovery towards 103 to 105 levels. Talking about domestic markets from the short-term point of view, intraday perspective, we suggest buying crude oil around 6140 with a stop loss below 6100, and we expect targets of around 6220 to 6250.
Vijay, what's your sense, especially on natural gas prices where we have seen some profit taking? Do you think we've done steam this year and we perhaps are looking at some lower stability prices coming now?
Manisha, 200 to 282 is a level that I talked all of last year and the week before that. So that fortnight-old target, the primary objective has been achieved. If at all you're looking at a potential extension of the up move, the 292 level may just be a possibility if the cold snap extends in the Western world and the perceived demand expansion in natural gas remains, which I think it might. So if you're looking at booking profits completely from this counter, I think 290 to 292 band is where you should be exhausting your longs. At 280 odd levels, maybe you need to take some money off the table, book your profits partly, and let the remaining ones ride.
All right, so that's the view really coming in for the non-agro space. Priyank, we'll let you go at that. Thank you so much for joining us and giving us your strategies for the near term and for 2014 too. With that, let's go for a break. When we come back, we'll talk about the agro commodities, where it has been a strong day for pulses and edible oil, not so much for most of those spices and sugar, of course.